Managing personal finances is a bit like training for a marathon. You can't just sprint and hope it works out. Small missteps can turn into big hurdles on your path to financial security. Let's explore the 10 biggest personal finance mistakes to avoid so you can keep your finances in tip-top shape. Number 10. Skipping the emergency fund. It's not just a rainy day fund. The importance of an emergency fund cannot be overstated. Imagine your car breaking down on the way to work, your fridge deciding to give out, or an unexpected job loss. These are the moments that prove the value of an emergency stash. Financial experts recommend keeping at least 3 to 6 months' worth of living expenses set aside in an emergency fund. With inflation making the cost of essentials unpredictable, this cushion becomes even more critical in 2024. Opt for a high-yield savings account to earn a bit of interest, so your money grows while it waits for the unexpected. Number 9. Ignoring inflation. The stealthy erosion of your spending power. Inflation doesn't knock on the door. It sneaks up. Ignoring inflation is like trying to fill a bucket with a small hole. You keep pouring, but it never fills. Over time, the rising costs of food, housing, and even fun activities chip away at your purchasing power. For 2024, inflation remains a concern, and it's wise to consider inflation-resistant investments, such as Treasury inflation-protected securities or stocks in essential goods companies, which often perform better during inflationary periods. Consider reevaluating your expenses every quarter to make adjustments and cut unnecessary costs. It keeps your budget current and ensures that your savings outpace inflation, helping you keep more of what you earn. Number 8. Overlooking changes in tax laws. Don't let the Internal Revenue Service surprise you. Tax laws change almost as quickly as fashion trends, and each year they impact how much of your income you actually get to keep. In 2024, changes to standard deductions, tax brackets, and credits could affect your bottom line. By staying on top of tax updates, you can avoid overpaying and make better use of tax-advantaged accounts. Contributions to Roth individual retirement accounts and health savings accounts, for example, can offer significant tax advantages that bolster your savings while reducing taxable income. Think of tax planning like using a good sunscreen. Without it, you're bound to get burned. A tax advisor can help you avoid painful surprises in April and make the most of current tax breaks. Number 7. Falling for high-risk investments. Crypto dreams, financial nightmares. There's nothing wrong with taking calculated risks, but too often, investors jump into high-risk areas without fully understanding the downside. Cryptocurrencies and NFTs are prime examples. They promise massive returns but come with extreme volatility. Only invest money in high-risk assets that you're prepared to lose, and keep your main investment portfolio diversified with safer options like bonds or index funds. As the saying goes, only risk what you can afford to lose. And in 2024, that's more true than ever. Establish a risk cap, a maximum percentage of your portfolio for speculative assets like crypto, so that even if the worst happens, you won't be left high and dry. Number 6. Neglecting retirement savings. Future you will not be happy. Retirement may seem far off, but time flies when you're not paying attention. The biggest advantage in retirement savings is time because compound interest works best over decades. Even modest contributions add up if you start early. In 2024, employer-sponsored retirement accounts like 400 and ONIC often come with a matching contribution, a no-brainer for maximizing retirement savings. Missing out on retirement contributions now means a smaller nest egg later, possibly delaying your retirement. Imagine retirement is a 3-course meal, and every year you delay is like skipping an appetizer. Sure, you'll survive, but it won't be as satisfying. Set up automatic monthly contributions to keep your retirement savings growing without a second thought. Number 5. Underestimating insurance needs. Don't get caught without an umbrella. Insurance might seem like an added expense, but it's truly a financial safety net. When health issues, car accidents, or home damages arise, being underinsured can lead to significant financial strain. In 2024, it's vital to review and update policies to reflect any life changes, such as marriage, home ownership, or additional dependents. Adequate coverage across life, health, auto, and home insurance prevents unexpected events from creating chaos in your finances. For those with growing assets, umbrella insurance is a wise addition, providing extra liability coverage beyond basic policies. It's especially useful if you have substantial savings, investments, or property, as it shields against major financial losses in lawsuits or accidents. Think of insurance as the umbrella you may not always carry, but are glad to have in a downpour. Regular policy reviews ensure your coverage is enough to weather life's unexpected storms without derailing your financial goals. Number 4. Letting lifestyle inflation creep in. It's not a treat-yourself economy. Lifestyle inflation when spending rises with income is one of the most subtle threats to financial health. After getting a raise, it's tempting to celebrate by upgrading to a new car, dining out more often, or even taking luxury vacations. However, these habit shifts can quickly erode the benefits of your higher income, leaving you in the same financial spot as before. To counter this, consider viewing raises as an opportunity to save and invest, not just to spend. Redirecting extra income into savings or investments can build a stronger financial foundation. For example, the 50% raise rule encourages allocating at least half of any raise to savings or investments, with the remainder for small lifestyle improvements. This way, you balance enjoying life with securing future goals like buying a home, funding travel without debt, or even retiring early. Set specific goals for your raises, whether adding to retirement, building an emergency fund, or investing. Having a plan keeps lifestyle inflation in check and makes your extra income work for you in the long term. Number 3. Failing to track spending and budgeting. Don't let your money ghost you. Budgeting is essential to personal finance, but many avoid it, thinking it's restrictive or tedious. In reality, tracking expenses can reveal spending patterns you hadn't noticed, like that daily coffee or unused subscription. Number 2. Not diversifying investments, avoiding the all-in mentality. Diversification is the golden rule of investing because it spreads risk across various asset classes, protecting your portfolio from dramatic losses in any single investment. Putting all your money into one stock or sector, whether it's tech, crypto, or real estate, means your entire portfolio is exposed to the volatility of that sector. In 2024, economic conditions and interest rates are creating distinct market fluctuations, making diversification even more essential. Consider balancing your portfolio with stocks, bonds, real estate, and perhaps commodities, as each asset class responds differently to economic shifts. Number 1. Overlooking financial education. Stay sharp, stay wealthy. The world of finance is constantly changing. New investment products, tax regulations, and economic trends emerge every year. Not keeping up is like showing up to a test without studying. In 2024, make a point to read financial news, follow trusted finance blogs, or even enroll in a personal finance course. Knowledge is not only power, it's profit. Being well-informed helps you make decisions that save and grow your money. Think of financial education as a small but high-return investment. Just an hour a week of reading can boost your financial IQ and help you make more confident decisions in all areas of personal finance. Thanks for joining this personal finance journey. If you found these tips helpful, hit the like button and subscribe for more ways to boost your financial game. Let's grow your money together. Don't miss out.